Ladies and gentlemen, good day and welcome to the H2 and year-ended 31st March 2023 earnings conference call of Knowledge Marine and Engineering Works Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ronak Jain from Orient Capital, their investor relations partner. Thank you, and over to you, sir.
Thank you. Good evening, everyone. Welcome to the H2 FY23 and year-ended 31st March 2023 earnings call of Knowledge Marine and Engineering Works Limited. Today on this call, we have Mr. Sujay Keval Ramani, Chief Executive Officer, along with Mrs. Kanak Keval Ramani, Director and Chief Financial Officer, and Mr. Saurabh Daswani, Managing Director. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations as of today, and actual results may differ materially. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. With this, I now hand over the call to Mr. Saurabh Daswani, sir, for his opening remarks. Over to you, sir.
A very good evening to everyone. On behalf of Knowledge Marine and Engineering Works Limited, I welcome you all to the financial year 2023 earnings call of the company. I hope everybody had an opportunity to go through the financial results and the investors presentation, which has been uploaded on the stock exchange as well as on our website. I would like to take this opportunity to give some background on the company for the benefit of all the participants. We commenced our business journey in the year 2013 under the name Kamal Marine and Engineering Works Private Limited, which undertook the business of repairs or refits of marine crafts. With 2 years of marine engineering experience, a technical team, and a sustainable financial growth, the group expanded to owning and operating small craft under the flagship of Knowledge Marine and Engineering Works Private Limited. Over the years, we have become an established player in the Indian small craft business segment and evolved from a small ship repair unit to ship owning and dredging company. KMEW is in the business of dredging and other port ancillary services like pilot boats, patrol boats, survey boats, mooring craft, tugboat, and hopper barges. These services collectively contribute to the efficient and safe operation of ports, support international trade, and promote the overall growth and development of the maritime industry. Our mission is to provide value addition to the ports and marine establishments through holistic, innovative, and environmentally sustainable solutions in the field of marine engineering and construction. We are one of the India's most reliable dredging companies with a presence on the eastern and western coast covering the major ports in India. Our geographical presence expands all the way starting from Kandla Port in the western India to Calcutta Port in East India. We are thrilled to announce that we have secured a significant contract for capital dredging at Mangalore Fishing Harbour Phase 3. The state-owned Dredging Corporation of India has awarded us this contract, which holds a contract value of 67.85 crores. In addition to this contract, we have also received an additional work order worth 16.5 crores from Dredging Corporation of India. This recognition of our exceptional performance at Mangalore Fishing Harbour demonstrates the trust and confidence placed in our capabilities. Furthermore, our remarkable track record at Mangalore Fishing Harbour has paved the way for us to secure another dredging contract from RKEC Projects Limited. This time, we have been entrusted with the development of a fishing harbour at Veerawal, Gujarat. This marks the second consecutive order for our company in the development of fishing harbours in Gujarat, showcasing our continuous success and expertise in this domain. Throughout the year, we have been successful in securing 2 extensions from our existing contracts. The first extension was granted by Visakhapatnam Port Authority for a duration of 2 years. This particular contract entails the supply, manning, operation and maintenance of 1 number pilot launch. We are pleased to have been entrusted with hiring of our vessel River Pearl 3 for this important role. Additionally, we have also received an extension from Syama Prasad Mukherjee Port in Kolkata. This extension highlights the confidence and satisfaction our clients have in our service. We are proud to continue our association with the port and look forward to further contributing in their operations. These contract extensions demonstrate our ability to deliver exceptional results and maintain strong relationships with our clients. We are pleased to announce the addition of 2 new vessels to our fleet, namely River Pearl 11 and River Pearl 12. River Pearl 11, a hopper barge, was acquired for a total consideration of rupees 3.5 crores, while River Pearl 12, a backhoe dredger, was acquired for a total consideration of rupees 2.25 crores. These vessels have been strategically deployed at Mangrove Port, further enhancing our operational capabilities in that area. River Pearl 10, a 10-ton bollard pull tug, is under construction at Synergy Shipbuilders Goa, and it is scheduled to get deployed at Vadina Offshore Terminal for a period of 7 years, starting from financial year 2024. As of now, the company has a strong order book of rupees 203 crores with an average tenure of more than 2.5 years. Also, the company has placed bids worth more than 1100 crores, and with a past hit rate of 50%, the company is confident in building a strong order book by the end of financial year 24. Coming to our first international contract at Myanmar, wherein we were entrusted by the Government of India to build a strategic port at Sitwe, over more than 75% of the contract milestone has been completed, and the remaining is expected to complete before the end of financial year 2024. With regard to the industry and growth perspective, the company is trying to spread its wings into the segment of dredging in inland waterways and sand mining. Working in the same line as stated earlier, the company has also placed various bids for various stretches in Ganga River and Brahmaputra River with Inland Waterways Authority of India and Dredging Corporation of India. I would now like to hand over the call to Mrs. Kanak Kevalramani to share her thoughts on the performance and strategic progress made by the company along its H2 financial year 2023 financial performance. Thank you, and over to you, Kanak.
Thank you, Saurabh, for the introduction. Good evening, everyone. We are delighted to announce that despite facing external challenges such as high inflationary pressures, Team KMEW has displayed remarkable resilience and unwavering dedication. Our consistent efforts have resulted in a robust performance for the financial year 2022-23. We are proud to share that we have achieved the highest ever revenue of rupees 201.5 crores, making a significant growth of 230% compared to the previous fiscal year. In terms of profitability, our EBITDA stood at rupees 68.7 crores with an impressive margin of 34.1% in FY23. Moreover, our profit after tax reached rupees 47.2 crores, showcasing a remarkable growth of 126.2% over financial year 2022. This exemplifies our commitment to delivering sustainable and profitable outcomes. Furthermore, we have maintained a strong financial position with a total cash flow from operations, that is CFO, amounting to rupees 36.1 crores. Notably, our EBITDA to CFO conversion ratio stood at an impressive 190%. I am pleased to announce that our group maintains a net cash positive of rupees 41.3 crores and has minimal long-term debt. This achievement highlights our commitment to prudent financial management. Furthermore, it demonstrates our proactive approach to debt repayment as we consistently strive to settle our debts well in advance of the contract completion tenure. During the year, we have announced a preferential issue by which we have raised rupees 39.6 crores to marquee investors. The issuance involves offering of 5,65,000 equity shares at an issue price of rupees 700 per share on a preferential basis. Our strategic vision centers on establishing a sustainable and reliable dredging and marine engineering company from India. We are committed to expanding our operations and aim to have a fleet of 50 or more vessels within the next 10 years. This expansion plan reflects our ambition to become a prominent player in the dredging industry. Furthermore, our objective is to capture a significant market share of 10% in the dredging business. By leveraging our expertise, advanced technology, and strong project execution capabilities, we aim to position ourselves as a trusted and preferred partner in the industry. I once again thank to all the stakeholders, investors, our employees, our team, and vendors to help us in our growth and success. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Sandeep Agarwal from Naredi Investment Private Limited. Please go ahead.
Hello.
Yeah, please go ahead, sir.
Yeah, thank you, sir, for the opportunity. So my first question is regarding the order book. So pending order book is 202 crore. So in financial year 22-23, we get only 87 crore orders. So what is the specific reason behind this? Any seasonality or any other reason, competitive intensity? Then what is your plan regarding the financial year 23-24? Any specific detail you want to share regarding order pipeline?
Sir, I'll take it one at a time. This is Sujay Kevaldamani here, the CEO of the company.
Yeah.
Basically, the order book stands at 202 crores as of 1st April 2023.
Yeah.
We have made bids worth more than 1100 crores today. The reason for delay in securing the orders is from the side of the government. They're taking a little while in their decision-making process. It is not due to any seasonality or any competition. We have not lost out of any orders. We are just awaiting the decision from the government, that's all.
Okay. So our trade receivable is 55.8 crore as on 31st March. So which is very high compared to previous year. So any specific reason?
Yes, there is a very specific reason for that. This is because of only one contract, the DCI Mangrol Fishing Harbour contract. The contract value was increased midway and the site dimensions were changed halfway by the employer due to demand of the local fishermen. This triggered a revised administrative approval from the competent authority before payments are released. The process takes about 3 to 6 months, and due to the recent elections in Gujarat state, the process slowed down. The company has been following up with the state government on regular basis, and the recent update is that 85% of the process is complete, and approval is expected in the month of July 2023 along with payment in the same month. All the bills have been accepted by the competent authority and pending dues have been confirmed. So there is no two ways about it. The payment is due. It is just the file is being processed and it requires to move through 24 different tables, and it is on the 21st table right now and in a positive way.
Okay. So my last question is regarding the EBITDA margin. So current year EBITDA margin is 34.10% compared to previous year 53%. In March Concall, you mentioned that the margin will be 40%. And in November Concall, you mentioned that 30% is sustainable margin. So can you share any specific range regarding the margin for next 2 to 3 years?
So it will always remain between 30 to 40%. I have been consistent about it. 40% is on the upper side, 30% is on the lower side. This is because we've only bid for orders which give us these margins. We do not chase orders which are below these margins.
Okay. Thank you.
Thank you. Our next question is from the line of Ayush Chaturvedi from Nuvama. Please go ahead.
Hi, am I audible?
Yes, sir. Boliye.
Yeah. So firstly, thanks for the opportunity and congrats on a great set of numbers yet again. So firstly, on the order book, we can see that the balance contracts currently stand at around 290 odd crores, including the 2 contracts, one from through Dredging Corporation of India. Now, I wanted to understand how much of it are we expected to execute in 24, and how much revenue recognition is expected out of the pipeline?
So about 150 crores. Thank you, sir. Thank you for the congratulations on the result. I would answer your question. The order book that is executable in the year 24 is 150 crores. And that's the revenue recognition as well.
150 from the current order book that you have shared on the 12th presentation. Hello?
Yes, that is correct. That is correct. 150 crores is in 2024, 23-24. This particular year, 150 crores is executable and receivable.
All right, understood. Okay, now secondly, we were earlier able to bid for contracts that were worth around 250 crores. And, so how much longer till we can, bid for bigger contracts? And what is the maximum contract size that we are currently going for?
There are 2 criteria, sir. One is volume and one is the price. So when it comes to volume, we have executed single contract of 3.8 million cubic meters. That makes us eligible to execute a contract with a volume of 4.5 million cubic meters. In terms of revenue, in terms of money, the single order that we have completed or that we will be completing is 250 crores, for which we are expecting the work completion certificate. That will make us eligible to participate in a contract of 310 crores.
The line for the participant will drop. May I request the management we move to the next question? Thank you. Our next question is from the line of CA Garvit Goyal from Invest Research. Please go ahead.
Hello. Good evening, sir. Am I audible?
Yes, sir. Please go ahead. You are audible.
So congratulations for this set of numbers. My question is particularly on the execution of the current order book, as well as the we have bid for, I think, INR 1100 kind of project, right? So how much do you expect in this particular year revenue from these bidding?
Sir, we can presently we have a bid book of 1100 crores. We usually have a pass hit rate of more than 50%. We are expecting at least 50% of the 1100 crore bid book that we have, and out of which we should be able to execute about 130 to 150 crores over and above the current order book.
In this particular year only, FY24?
Yes, sir.
Okay, so that means our total to overline somewhere between 280 to 300 crore, right? That is your internal target.
Yes, yes, sir.
And sir, can you please spend some time on why these delays are happening? Like in last phone call, we were saying we have applied for 500 CR kind of tenders. Now this is 1100. Obviously, that 500 CR is included in it. So what is the reason for this significant delay? Like it is almost six months. So
sir, I'll give you a breakup of this, sir. We have out of 1100 crores, 400 crores are bids made with Inland Waterway Authority of India. These are river dredging bids. 425 crores go into the sand mining business. 70 crore bids are for small craft business, and with other private players like L&T and ITD Cementation, we have made bids in excess of 275 crores. in inland waterway, the processes is taking time because these are World Bank funded projects and require several levels of scrutiny. So, and there is no way we can interfere or even ask the government when the decision making is going to take place. Usually they have a bid validity of 180 days, but sometimes government can extend till the decision making process, request us for an extension of the bid validity. We do because we have catered for it. In the sand mining business, which is a new business, we are exploring the international and the domestic market. This is also a new business that is developing, and that is why it is taking some time. The small craft business, we have been bidding regularly and they are taking calls on it. Very soon, maybe in a week or 2 weeks, we will get to hear about 3 of the contracts that we are expecting. And the business with private entities is with the defense, naval defense on the east coast of India. Government is taking certain time on those defense projects also to reply. But these are all high value, high margin businesses which once are awarded will work out to be in that 30 to 40% EBITDA margins of ours. So we are very hopeful of the same, and we are working with the government as and when they are asking us any questions or clarifications on the same, we are providing the same. So the process is on. That's all I can say right now.
It can't be said with certainty whether when this bidding will be announced. Result of the bidding will be announced, right?
It is very difficult to say. It could happen as early as this week, and it could take another month or so. But it is completely, the decision making is completely on the government. It does not allow us to interfere with that process.
Understood, sir. Understood. And talking about the margins, so what are your overall margin guidance for FY24?
Sorry, say again.
What is our margin guidance for FY24? Overall margin guidance.
So that will remain the same between 30 to 40% EBITDA margins, and PAT will be between 20 to 25%.
So that means top line 280 to 300 and EBITDA will be somewhere between 30 to 40%, right?
Should be that.
Okay. Thank you very much, sir, and all the best for the future.
Thank you. Our next question is from the line of Ayush Chaturvedi from Nuvama. Please go ahead, sir.
Yeah, sorry. Apologies, my line got dropped. So I was asking you, till when are we expected to start bidding for bigger contracts? And secondly, I think, if I'm not mistaken, we have raised around 40 crores for port dredging. Just wanted to, check the status on the same.
Sir, what I could get from your question was, what is the status on the dredgers worth 40 crores? Correct?
Yeah, yes.
So that we have currently bid for with IWI 4 different contracts, and the dredger quantum will increase from 4 to 8 with the bids that we have made. 4, we had said that we'll at least get 2 contracts. Those are under evaluation. We have already identified the dredgers, but once the contract is awarded, only then we will invest into the asset.
Okay. So we could go, or we could add up to 8 dredgers by the end of this year.
Yes.
All right. Okay. And how much additional revenue can we expect from the same?
So these are contracts worth 400 crores.
Worth 400 crores. That's okay. That's very encouraging. Now, secondly, on the margins again, so we've seen a bit of contraction year on year from in H2. So just wanted to understand how the operational cost ramp up goes up with respect to the contracts that are. So is it correlated to how many fleets or how big the fleet is, or how exactly do you see, or how do you exactly account for the operational cost for each contract?
This particular year, we had dry docking of 2 vessels. That is the reason the margins got contracted. That is not a yearly event, and with the JV contract, the subcontracting price is a little high. That is particular reason. That is why the cost has gone up. But if you have any specific question about any particular item under the profit and loss, you could answer that.
No, so just wanted to understand how you see this panning out over the next year. So you mentioned that dry docking of 2 vessels impacted the margins this half year. But so is the same expect can is it a recurring phenomenon, or how margin can we look at or projected?
So let me give you a breakup of the expenditure, and then I'll tell you that the dry docking is a phenomenon that happens every 2.5 years. That will answer your first question. I'll let Kanak give you a breakup of the expenditure, which is in terms of percentage of the top line.
Sure.
Hey Ayush, this is Kanak. So I'll give you the breakup. So 25% of our turnover goes on fuel expense. That is a major expense which we have. And after that, 4 to 5% is the employee cost. And then thereafter, 30% goes on crew wages, subcontracting, repair and maintenance, and consumables, which are used.
Hi. Am I audible?
Yeah.
Yeah.
Hello?
Okay. Yeah.
Yeah. So 30% goes on crew wages, subcontracting, repairs and maintenance, and consumables, which are used for the ship. And 5% goes on other expenses, and then comes our EBITDA, which is between 35 to 40%.
Okay, understood. So there's some headroom for margin expansion in the current year, is what I understand.
Right.
All right. Great. So can I squeeze in one more question, or should I, join the queue again? So I'll try to squeeze in. So currently, our winning rate is around 50%, if I understand correctly. So
yes.
I just wanted to understand what exactly, or what is the sort of competition, and what's the outlook on that? So
So
elaborate on that.
In the bid book of 1,100 crores, there are contracts in which there are only 2 parties. One of us is us, and there's another party, and the highest number of bidders in 2 contracts is 4. But the pre-qualification is going on. At the end of pre-qualification, the government may decide to remove a few players, but they cannot add. So the highest number of competition in a contract is 4 players, including us, and the smallest competition is 1 more player, including us.
Okay. All right. Understood. So what's your outlook on the same? So how in the next say 3 to 5 years, how big do you reckon the order book is going to be like?
I would like to say at this stage that we are very excited to announce that we have made serious attempts to enter into sand mining business, domestically and internationally. The business is expected to give long-term and give sustainable revenue. These contracts are 5 years to 20-year long contracts.
Okay.
Some of the same is expected in this particular year to come.
Okay. So the visibility for revenues will be that much more, is my takeaway. Am I correct in that assumption?
Yes.
Because you're
We are no longer start bidding for 2-year contracts. Working more seriously towards 5-year to 20-year long contracts.
Oh, all right. That's very encouraging. So thanks a lot, sir. Thanks a lot for your time.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Avinash Koroshankar from Profit Mart Securities. Please go ahead.
Yeah, I think Sujay, excellent numbers, and congratulations to you and the entire management team. I've just got 2 questions. I was seeing your presentation. I think there is some mention that the company plans to have some tie-up with companies like Larsen & Toubro, ITD cementation. If you could add some color on this and share some thoughts, what is exactly the company planning to do? And secondly, you mentioned something about the the sand mining segment, for which I believe sometime back you had said that you all will be investing in cutter suction dredgers as well as the fishing harbor kind of projects. So any status on those projects, if you could add some color.
Thank you, Avinash ji. Thank you so much. Two questions, so I'll take the first one. We are seeing nowadays that government is more keen on a single window system. So we are doing business from the sea side of things, and then there is shore side of things. So we are trying to move a step forward in the future, wherein we are wanting EPC contractors, large EPC contractors who are into port sector, and we are doing a tie-up with them so that we could submit a single bid to the government for the whole project as a one. So that is something that we are exploring actively right now. And we are discussing not just with L&T ITD, but with various companies at this stage to go forward as a joint venture in the future. Second, the cutter suction dredgers were for inland waterway dredging business, sir. Mining business will require a different set of equipment that will have to be placed. It will be a sort of a cutter section dredger, but dredger with a longer depth and reach. So we have got ourselves qualified in those businesses, and the tendering process is on. So this year, the results will be out, and this is happening in various states of India: Maharashtra, Karnataka, Kerala, Madhya Pradesh, recently in Rajasthan as well. So several of these bids are coming out, and we'll be participating in the same. And these are all long-term contracts.
On the fishing harbor contract, anything, any update, Sujay, if you could tell, or maybe it's still, in preliminary stage?
The first contract we have already secured from Gujarat government through Dredging Corporation of India. We will be completing this contract first half, and then basis the experience of that contract, we have got another contract from RKEC, which got the development of Unrivaled Harbour. So that's the second contract that we have got, which we'll be executing in the second half of this year.
Okay, and one.
Hello?
Hello?
Yeah, we could hear you.
What is the broad capex which the company plans to incur in FY24? If you could please tell us.
So it will be between 60 to 90 crores, depending on the contract that we secure.
Okay. So basically, just like earlier what you had mentioned that, whenever a project comes, that is the time when you actually plan your capex. So, it will all be capex related. So this is this capex is directly relatable for projects which you are going to implement in the coming year, right?
That is very true. We only invest into the assets, we identify them, but we only invest into them once the project is awarded to us.
Anyway, I think thank you very much for the input, Sujay, and you and the entire management team.
Thank you, sir. Thank you.
Thank you. Our next question is from the line of Nagi from Goose B Capital. Please go ahead.
Can you hear me, sir?
Sorry, sir. Can you be a little loud?
Can you hear me?
Yeah, please go ahead.
Yes, congratulations on the good set of numbers. I have two questions. One is that, are there any plans on listing on the main board? That is the number one question. And the second one, are there any plans for the bonus issue so that it will give that wide base to that and enter the small shareholders?
Sir, we are planning to move to the main board in the current year. And about the bonus issue, presently the board hasn't taken any call on it. We will update the stakeholders once the board takes a call on it.
Yeah, thanks. Thanks a lot.
Thank you. Our next question is from the line of Rajesh Vora from Jain May Inventures. Please go ahead.
Good afternoon, gentlemen. Congrats on good set of numbers. Sujay, if you could give an idea about, since IPO 2 years ago, your company has done phenomenally well in terms of revenues and profits that are up almost 6-7 times each. So what is it that happened in last 2 years that did not happen previously?
Sir, like I said, there are several entry barriers, and we were able to do a joint venture with a good company and break those entry barriers to secure a contract of 100 crores, which ended up being a contract of 200 crores because our vessel was able to perform very well. and the quantum increase. So as we go further into the future, we'll be able to qualify for larger contracts, and we are hoping the result continues.
Okay. And in your presentation, there is a mention, and I think Kanak Madam ji also mentioned that the company aims to have 50 plus fleet size in next decade. And in the presentation, it is mentioned that the company aims to capture 10% market share. So the market size that you assume for this 10% market share is what? In presentation, there are two different markets, 5,000 crores each and 2,000 crores each. So could you please elaborate a bit on that to give an idea?
Sir, we are considering the market size of 10,000 crores per annum, and we are planning to reach at least 1,000 crore of top line within the decade. And about 40 plus fleet, that is definitely the plan, because we started with 0 and we stand at 12 today. Going forward, we at least believe that we should own 40 different types of crafts that will make us eligible to execute any type of work that is in India and abroad with any type of soil that we encounter. So that's the plan for the next decade.
Wonderful. And maybe if you could spend a couple of minutes on what can go wrong in this journey of next decade or 10% that you are aiming. What are the big risks?
So the biggest risk for a dredging contractor is not knowing where they are jumping, whether it is a swimming pool or a mud. So before we make that leap, we do a lot of studies, and over the last 17, 18 years, we have collected a lot of data along the Indian coast and Bangladesh, Myanmar, Maldives. And when we take decisions based on the data that is available in front of us, which is accurate. That helps us assess the type of production that we can get with the equipment that we possess or the equipment that we need to hire from the market. Once the equipment is fixed and the production is fixed, the risk is pretty much mitigated and the results are in front of you. So these are the worries that we have, and we have been trying to address them over the last 17 years by collecting the data and taking decisions on database.
Wonderful, Sujayji. Thank you so much. Wish you all the very best.
Thank you, sir.
Thank you. Our next question is from the line of Vinay Khattar from Lucky Investment. Please go ahead.
Hi. Good afternoon. Very good set of numbers. Congratulations for that. I just wanted to get some basic sense. One, what are the broad bidding rates in terms of per cubic meter and associated cost, both for harbors, and I understand there will be a big range this bottom, and similar number for, let's say, sand mining.
Thank you, sir. Thank you for the wishes. For ports and harbor, the number changes from 200 rupees a cubic meter to 1300 rupees a cubic meter in soil. Now this varies because of the type of soil, also the type of equipment deployed, the distance to which the soil is being carried, and things like that. When it comes to rock, the rate varies from 3,000 rupees per cubic meter to 10,000 rupees per cubic meter when it is hard strata, hard rock. Also, this has a similar kind of comparison when it comes to type of dumping ground, whether it is being reclaimed or whether it is being dumped offshore. So the range is from 3,000 rupees to 10,000 rupees when it comes to rock. In sand mining business, the rates are controlled by the market driven. So they will vary. It is a demand supply gap. So it will vary state to state. In Maharashtra, sand is purchased, river sand is purchased anywhere between 1,000 to 1,100 rupees per unit. And in terms of Rajasthan, that is 600 rupees. In terms of Madhya Pradesh, it is 500 rupees. In terms of Gujarat, it is 600 rupees. So it varies from state to state. The dredging cost is usually in sand mining business anywhere between 200 rupees to 250 rupees per unit.
So that's wonderful. Very detailed answer. So one other thing which I just wanted to clarify. We are doing direct bidding as well as we are subcontracting for DCI. How does the pricing, economics and margins change in both the cases?
Sir, I could not get your questions. There was a break in your voice. Could you repeat, please?
Yeah.
Mr. Vinay, may we request you to use the handset, please, for audio quality? Thank you.
Is this better?
Please try again.
Is this better?
Yes, sir. I think you can try again.
Yeah. So I was saying that when we are doing both direct bidding as well as we are subcontracting for DCI, if my understanding is right. Can you clarify that? One. Second, how does the pricing and margins differ in both the cases?
Well, in case when we are going on our own, we have little better margins as compared to subcontracting with DCI. DCI usually holds about 5% to 10% of the margins with themselves. So they get a particular rate on nomination basis from the employer, and then they will bid out the contract after keeping margins of 5 to 10%. When we are able to directly contract with the employer, that's when we are even able to exploit the additional 5 to 10% margin.
So in a DCI contract, this could be then means that we are closer to 30% or lower?
No. Even without that, we have maintained more than 30%. I'm saying we could go more than 40% if we were able to get the contract directly from the employer.
Understood. So if we are direct, then we are closer to 40, and if we are through DCI, then that's maybe 30-35%.
Yes.
Understood. So another point that you spoke of, we were sitting on significant cash, and cash flow to EBITDA ratios are fairly good. But the kind of expansion that you are talking about, including 4 bridges, which will have to be bought probably this year if we get those contracts, is there a plan for next capital raise 1 year down the line? How do you guys see? Or will the internal cash flows be sufficient without any further dilution of equity, at least in the next 2 to 3 years?
Presently, we have no plans to dilute any equity this current year. If at all there is a requirement, we will go with debt. We are sitting on cash in excess of, by the end of this first half, we'll be sitting on cash in excess of 80 crores. So if at all any further expansion is required and any further capex is required subsequent to an award of a contract, we'll go for debt.
Understood. So one last question, if I could just ask. In one of the points on risk, you mentioned that you've got a very rich repository of data of Indian coast in terms of soil, in terms of the ocean, the sea bottom, and so on. But how do we get this data? Do we do any kind of our own survey? Is this data commercially available? Do we own survey vessels? I mean, how is this done?
So we have done certain surveys ourselves. Other people have also done certain surveys. We have tied up with those survey agencies and procured that data. We have had long interactions with the employers and collected data over the past 30 years from the employers. So we have cross-matched that data, and since the dredging is going on year-on-year basis, we have been collecting data from public domain as well. So it's a mix of all.
But anybody will have access to this particular repository, right?
Anybody who is interested and is continuously collecting this data over the last 20 years will have, yes. But they won't have the first-hand experience that we've had as well. So they would have to learn from the employer, and they would have to learn from themselves. So, but unless they are in the dredging business, unless they are doing it themselves, they will only have information that is third-party information.
Understood. This is very helpful. Thank you.
Thank you, sir.
Thank you. Our next question is from the line of Janak Lotwala, who's an investor. Please go ahead.
Hi, Sujay. Am I audible?
Yes, sir, you're audible. Please go ahead.
Yeah. Thank you for taking my query. I had only one query. This is regarding the international business that we intend to pursue. In the last con call, I believe there was a mention of a business that we are trying to crack with the port authorities in Maldives, something on the lines of similar project that we did in Myanmar. Any update on that front?
Sir, we explored that business. That particular business was not giving us the margins, and it required us to invest a lot compared to the ROC and ROC that we maintain. So we have kept a pause on that. Whereas presently we are exploring business in Myanmar, additional business in Myanmar and Bahrain.
Okay. Okay. And any size of business that guidance or something on that front? What kind of business do we expect there? Will it be maintenance? Will it be capital dredging, and the size of the opportunity that we can look at?
So I can give you a brief in the sense in Myanmar, it is regular dredging business. In Bahrain, it is sand mining business. So size and all you will get to know very soon.
Okay, Sujay, that very well answers, and I wish the management all the best for quarters to come. Thank you.
Thank you.
Thank you. Our next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello, sir. Yeah, you were talking about this 8 dredgers that you're planning to add by the end of the year for the contract of the size of 400 crore, depending on the contract if you get or not. I mean, if it is executable or not. Just to get an understanding, what would be the cost of this 8 dredgers in case you go ahead with it?
Cost of each dredger is between 8 to 10 crore rupees.
Okay. And the capex that you're planning around 60 plus crore, I mean, would this be over and above that, or you have got some dredgers, calculated as part of the capex?
So this is including that. We are not doing this as a separate case. The capex will be limited to 60 to 90 crores this year, and that would include the dredger of cutter section dredgers, because we are expecting at least a hit rate of 50%. So with four dredgers instead of 8. But if we get all 8, then we'll take debt for it, and we will plan for the capex.
Oh, okay. Got it. Yeah. So what would be the margin profile for this specific contract? I mean, is it a bit lucrative, more lucrative than what you currently hold in your books?
No, sir. It is along the same margins, the EBITDA margins of 30 to 40%. It will maintain that.
Okay, fine. That's all from my side. Thank you. All the best.
Thank you, sir.
Thank you. Our next question is from the line of Abhishek Singhal from Naredi Investment. Please go ahead.
Thank you, sir, for taking my question. So my first question, as on March 22 Concall, you specified regarding new business plan like shipbuilding JV timeline 3 to 6 months, and dredging cutter JV 6 months, fishing harbor or scrapping vessel JV 1 year. So what is the current status? Please update us.
Sir, regarding fishing harbor, I've already updated that the first contract is about to be completed, and we have already got a second contract. We have maintained our margins in that contract. Regarding cutter section dredgers, we are planning to invest, and we have made bids worth 400 crores with Inland Waterway Authority of India, and we are fully qualified for that. Regarding shipbuilding, sir, we are doing it for ourselves right now. We are not doing it for a third party because we find that investing into that business is not yielding similar margins to that of dredging. So we are waiting for a contract wherein we get those kind of margins. Or we are looking to further see what kind of subsidy the government offers. And last one being the sand mining business, we have made bids worth 425 crores in that as well.
Okay. And second question, 500 crore order are expected to receive in FY24. So how many new vessels will be required to fulfill the order, and new fleet will be manufactured itself or purchased from market?
Sir, the new fleet in terms of inland waterway dredging, sand mining, and with private entities will either be purchased directly from the market or hired. When it comes to small craft business, that is 70 crores, we will build those assets, and that construction is allowed under that particular contract. The capex plan is between 60 to 90 crores. So we will add anywhere between 4 to 8 assets in this particular year.
Okay. And sir, last question. Government currently working on a Namami Gange project. Will you also participate in that project, and can we get any order from there?
So we are actively exploring that project, and we are working with the government on that. Since it's a very large project, we are asking the government to break the project up into parts. It's an entry barrier, and no other Indian contractor is also qualified single-handedly because they don't have such kind of dredging experience. So once the government breaks it up into parts of 300 crores or 500 crores, or in terms of volume, in terms of 3.8 million or 4 million cubic meters each stretch, then we'll be able to participate.
Okay. Thank you so much. And a small suggestion from my side. Whenever you receive any new order, please also update on exchange platform, and do not wait for result session.
Sir, advice well taken. We will do it immediately within 24 hours of getting the orders.
Okay. Thank you so much.
Thank you. Our next question is from the line of CA Garvit Goyal from Invest Research. Please go ahead.
Okay, thanks for the opportunity again. I'm more asking basically from H1 point of view. So out of total order book of 200 CR, how much is going to be executed in H1?
Sir, it will be between 120 to 140 crores.
And out of total, I think you mentioned 150 CR will be executed in entire year, and 140 will be in H1 only.
Correct.
Okay.
That is what we are planning for.
Okay. Understood. Thank you.
Thank you. In the interest of time, that was the last question of our question and answer session. I would now like to hand the conference over to Mr. Ronak Jain for closing comments.
Thank you, participants, for having us today. It has been a pleasure. If there are any other questions or queries that we have not been able to answer, please feel free to reach out to the Orient Capital team. Thank you.
Thank you, sir. Thank you.
Thank you so much.
Thank you. On behalf of Knowledge Marine and Engineering Works Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.